So with 3/4 of the year still ahead, are we looking at good news or bad news ending to all of this? Well, the markets start growing again. Will that happen? Or have we already passed the tipping point for the third sustained major market correction since the year 2000? Well, as we pointed out a few weeks ago, there are different opinions about that, and ultimately, it's probably still too early in 2018 for us to tell. But if your instinct is to cling to optimism and to quickly dismiss all the preponderance of evidence that another major stock market correction might be in the works, that could have more to do with psychology than with the actual situation. And I mean both your psychology personally, as well as human psychology in general, which is why I wanted to focus on this such an important topic on today's show. So, for example, if you happen to be an optimist by nature, you probably feel that more often than not your optimism has served you well. And I agree that in most cases it probably has. You know, let's face it, optimists are much more likely to be successful in business, successful in life, more so than pessimists. And generally, optimism is a wonderful trait to have. But you know, like anything else, it also has a potential downside. And I see it frequently as a financial advisor. Clients who are optimists are always looking for any shred of evidence that reinforces their optimism. At the same time, they instinctively try to minimize or ignore evidence that works against it. And this, as you can imagine, can have incredibly major consequences when it comes to investment decisions. For example, ask yourself this. During the last prolonged secular bear market in the stock market from 1966 to 1982, almost 17 years, who were the investors most likely to have stayed in the market through 3 major drops for almost 17 years, only to get 0 net growth during that time? You think it might have been the pessimists or perhaps the optimists who always thought that that real recovery was just right around the corner? I think the answer, of course, is pretty obvious. And it shows how optimism can actually work against you psychologically in the financial markets.